You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome, everybody. Excuse me, the Master Trader Live. Today, we're going to be talking about the psychological mindset of traders. Many say it's the hugest part of being successful as a trader, technical trader, investor, and I couldn't agree more. How you get to that mindset can be a very long journey because there's no template for it. We all come to the markets looking for fundamentals, PE ratios, obviously technical analysis to figure out what's happened in the past, what's happening in the present, and the most difficult part, what's going to happen in the future to come to a reasonable bias as to that probability. Probability being the key word there because none of us know the future ultimately. It's based on a belief. How you build that belief system to technical traders is called a trading plan. Now, there are so many different influences, especially as an intraday trader, to divert you from that trading plan. And there are element parts in time that diverting from that plan is necessary based on new information, but primarily our focus has to be to find the discipline and patience to adhere to that trading plan, which ultimately is a hurdle when it comes to trading, because the reality is that there are a lot of gray areas to this, and we try to eliminate them as much as possible. It's not like many other professions, and this is what makes it difficult. A big part of it is based on the indicator-based methodology. And even changing time frames and different settings, all of that, as it begins to change your reality of the moment, whatever that is, daily chart, weekly chart, intraday chart, as that shifts, the psychological turmoil that begins could be, again, a big hurdle to get over. And so what we'll cover today is how we all can accomplish that and to accept ultimately what's the unknown, the future. So let's do it, Dan.
Awesome. Good afternoon. Yeah, let's jump right into it. And we'll show you examples of fundamental analysis, but Greg, I always listen to your intro and it things pop up in my head, and that's what we're going to cover today, our technical approach of what moves prices, because people have a belief of what moves things, and then they get fixated on that, like fundamental analysis is specifically what I'm referring to. So people, today's subject, many people have such a difficult time saying, well, you and I met in the internet days. Why are stocks quadrupling that have no earnings? They have no earnings. And what about this stock that has beautiful earnings, beautiful management, and it's tanking? How do you reconcile that? I'm kind of, just throwing that overall comment out, right? You don't have to answer now, but that's a big problem in the psychological mindset of that, coming to the understanding of what moves prices, what really matters, discarding the noise.
Yeah, and we all come from that point, what you're saying, Dan, from our own perspective, meaning what does our individual logic tell us? And there are things that we all perceive as being logical on a very broad sense. And that logic it creates, I believe that this is the way things should be. And the
Should is what you said, right? Should.
market puts in your face whatever you think, Mr. Gibby or Mr. Capra, this is reality today. Do you want to accept it, or do you want to butt your head against it? And we all struggle with that.
Excellent, right. Excellent. So it's, you know, you're touching on the subjective versus objective. You have all these marvelous sayings about, well, reality is in front of your face, like you just said. So by you not responding to reality, you're living in a subjective hope mode. So, you know, I started with this slide here today because we're talking about the proper mindset, of course. I guarantee you 99% of us have experienced this bell curve, if you will, and you can overlay your level of knowledge with this. For example, that people who come to the market and don't have education, and they everything's going up, and they think, look, I'm brilliant, I'm excited, I'm thrilled, you're high-fiving your friends at the bar, and then reality kicks in. So many times in the green room we see things making moves, and I jokingly say, so who's the idiot that paid $165 for this thing? And then capitulation, they're like, I can't take it anymore. I'm losing sleep. I'm literally losing sleep over my unrealized loss. And then you hit your puke point. But the charts at that puke point, we might have a phenomenal bottoming pattern because we don't have that mental baggage associated with the charts. We don't have the mental baggage associated with something becoming a climactic sell setup and us selling our merchandise into strength. And it's so easy to say, well, follow the rules, follow the trading plan, don't be emotional. And we know that's not, unless you or have a machine that doesn't have emotions. Of course, we're emotional beings, but our session today is to help you identify it, focus on what really matters, to minimize it, even turn that negative into a positive. So let's continue.
But then part of what you're saying, if everybody caught that, was that you're saying because you or I didn't experience this or this,
Right.
we are more susceptible or accepting of this.
Okay, correct.
Yeah. And so how we even the reality is that as long as we do this, at some point, because of human nature, we are going to experience this and this and this, and how we shift emotionally from that to accepting this is a hurdle. And I think it comes with experience, because there's no way, it's like anything else that we do. You get educated about something, and you hear this is the way it's done, this is the way it's not done. There are in-betweens, and then we have to experience that to really become a professional at it. There's no way around it.
And so Greg, I don't know if you heard my 5 or 10 minute discussion on Upstart yesterday. That this is a prime example of what we're talking about, and I even mentioned today's session. So just eyeballing here, Upstart on the monthly chart was $400 stock. Now it was on my core long list, and the daily, weekly, monthly are now supporting an entry down here. It went from 400 to 12. And now we have a pattern where we entered a half position today at 20, down from 400. But let's come back to it, because this is a great example of, well, and people in the green room were saying, oh, it's a junk company, it's this, their book, they're and my response was, I'm not refuting one iota of that, because I don't know. But what I do know is my technical approach tells me to enter now, which is what we did this morning. This is a slide we show all the time because this is our approach to trading the markets. We're pattern based, and we take that pattern, we overlay these other concepts. Where is it in the trend? Support and resistance, multiple time frames. But you know what? We added this last bullet here, not only for today, but for in the future, because that's what we're talking about. Psychology is integral to every one of these. That yes, you can take Greg's course. Yes, I see it. Yes, I understand the pattern. I understand retracement. I understand support. But then I can give the same trade to 10 different people. Why do I have 10 different outcomes when I tell them in black and white, here's where I want you to enter, here's how I want you to manage it? Why do I get 10 different answers at the end? It's because of this.
How individuals, perceive the same information that they're looking at. Now, what Dan is saying is he's speaking from the point of view of someone that took our course. And if the course says something is going up and it's pulling back to support, and this pattern says to buy, why did someone short it? Why did someone buy it 3 bars after the buy setup?
Right. All right. So again, we're giving, as we always do, little building blocks here. So whether you are wanting to become a mechanic, an architect, a trader, how do I do that? Well, it starts with you need an objective approach, and that's what I call getting the conscious competence, which is Greg's course, the foundation of trading anything that moves as a technician. And so you get the education, then you need the confidence. How do you get that? Well, it's having a method that you understand, you see, you start paper trading, and you get the confidence. And then Greg mentioned the intro. Okay, I have this beautiful trading plan, which we'll get into. And I'm always giving silly analogies. If you're a hunter, you don't just go out into your deer stand and start shooting. You have an approach to shoot the deer or whatever you're hunting. And then you know how to do it. You have the confidence. You went to school. You've done it. You practiced. Now I need the patience and discipline to follow my approach to shooting the deer. No different in trading.
Well, you're right, Dan, but so the association that you're making to a hunter shooting a deer is, they go out and buy this powerful gun, and that gives them confidence that they can kill the deer. Then, they go out into the woods and walk around or sit in some
Deer stand,
blind or whatever. And it's like after 6 hours, they're sitting there going, okay, where's the deer? And now how do you have the discipline not to leave there? And then, we all had that experience of, hey, I've been watching XYZ all day and I moved on to something else. And then, it moved as we thought it would. So we didn't have the discipline to stick with it. And as it says, how do we get there?
Well, and that brings us back to this. So this is our approach. So I'm waiting for the patience and discipline for this to line up. And this might, it sounds like a lot of concepts here, and that's how we teach it in these thought building modules. But as soon as I put the chart in my setup, my brain is immediately interpreting all these concepts, and I immediately know whether it's a high probability setup or not. And so many times in the green room, somebody says, "Oh, what about XYZ?" And I say, "All right, well, we'll rank it." Today's subject. I say, Sam, rank it, the quality of that setup from 1 to 10. And if he says 6, well, then why do you want to trade a 60% quality? So Greg, how, again, it's today's subject. How do we get people to only trade 80 and above quality?
give them 80 and above quality ideas, whether they take them is another's, I guess part of this conversation. But the reason we all take substandard trades is because we can't find one in the moment that meets that criteria. And part of the struggle with being a technical trader, investor, I mean, even if you're a swing trader and there, the markets are going sideways like they are now, there are fewer opportunities. You may not find the ones that are available. You're not using like scanning software like we do, or don't look through 500 charts or whatever. And as an intraday trader, things aren't lining up for what, in that particular moment. And you wind up taking a trade because you don't feel like you're doing anything constructive. How do you measure constructive? Well, most of us would say, am I making money? And from the mindset you need to build on, constructive is, am I following the trading plan? Because ultimately the goal should be that I'm executing the plan that I have reviewed for hundreds of hours, possibly, that highly probable that I would be successful if I followed it. And when we don't find things that meet that criteria, there's going to be, this urge to do something constructive. And is constructive pressing a button on something that you really don't understand, possibly, or on a subjective level, maybe you understand it, but it isn't complete, meaning, oh, I see that 2-bar reversal. I know what that means. But you press the button and then it's like, hey, that bullish 2-bar reversal was in a downtrend. And then you find out it failed. And it's part of the process that we go through.
Well, and our subscribers, I think, know that very well. Like, for example, our weekly options trader this morning, we only had 2 open positions. That's unusually low. When things are lined up and we can find trades left and right, we might have 18 trades in that thing. And so we're applying our approach, and there's not these high probability setups, so we don't give them. All right, so this we kind of talked about already. What moves prices? This is fundamental analysis. Oh, Enron, and I'm purposely showing you this whole chart. This used to be a Fortune 10 company. Everyone on Wall Street loved it. It's kind of like the Apple of today. And fundamentally, Enron's wonderful. Technically, which is the reflection of all market participants using supply and demand, this is a topping pattern. This is a bearish retest. And now I got a downtrend. And so this thing, I remember it went from $90 and change to 0. Yeah. So go back to that emotion chart and you can overlay the emotions on this. And did you use technicals to trade it properly, which was get out of your long and take a short position if you're a technical trader like us? Or did you let this fundamental get in your head and say, well, I'm going to keep buying the dips because it's a fundamentally strong company? So I kind of just said this, technical analysis is our approach, because I mean, the key is right here. Whatever time frame you're looking at, there's different market participants buying and selling for different reasons, different time frames, different approaches, fundamental, technical, retracement. It doesn't matter. The charts don't lie. It reflects the true beliefs of all market participants. It's reflecting in it. And so we are trading these pictures, which are the sum total of supply and demand. That is the true thing that moves prices. That's why we're saying price action is reality, not fundamentals, not earnings, not spokespeople, not CNBC. Rabbit hole. So people are looking for in this example, oscillators, they're looking for the holy grail. This is Greg's beautiful chart of people trying to sell you this secret indicator, and it's just a rabbit hole of an approach to the markets that don't work. It gives you false information.
So part of, we perceive it as false information because it's not part of our method. Now, most of you are probably familiar, this is called an Ichikumi cloud. And Pat just posted that in there. Most learned discipline after going broke a few times actually instructed me on how to pronounce that word. She broke it down for me. Thanks, Pat, at that time. But it's based on trying to define trends in multiple time frames, support and resistance, where prices are going to turn. And any method is built to create a belief system. Now, beliefs are not facts, and the facts are the prices going up, down, or sideways? Is something a wide range bar? How we define buy and sell setups and support and resistance. But when you start overlaying something like this, that is supposed to tell you where support and resistance is versus just looking to the left, it just creates so much confusion trying to figure out why it worked sometimes, why it didn't work. And this has multitude of different settings. So anytime you start changing settings to something, the pictures begin to change, which is, of course, inclusive in changing timeframes. So there's always choices to be made. But as you start adding this type of noise to a chart, your reality shifts all the time, and questions go on and on and on. And like it's a rabbit hole.
All right. So what do successful traders do? They prepare, they have realistic expectations, they have a trading plan, they have an objective, systematic approach, and don't change them. We've talked about this. You have the discipline and patience to do nothing, and they're consistent in their approach.
Yeah, go back to that for 1 second. Another way of saying this is to recognize and accept your limitations. So if you're starting out in any profession and you have no education, or you have, the beginning parts of your education, you're a freshman or a sophomore, if you want to relate that to high school or college or whatever, and little experience, and your expectation is that, you're going to start making all kinds of money. Well, you're kidding yourself. And that's a big step in the right direction to accept those limitations and putting your expectations in, based on the reality of where things are right now, and then building that plan on how you're going to get to your goal, which then encompasses the rules, finding the discipline not to break them, pressing the button when you see the opportunity, trade the plan, sit on your hands, don't change the rules on the fly. And that builds that confidence.
And just to add one more example of the expectations, how many emails do we get from new inquiries? They're like, oh yeah, I love you all, good reputation. I have a $10,000 account. Can you teach me how to make $1,000 a week? Like, how do you want me to answer that? It's unrealistic. The only human way to do that is to take crazy risk, which is not our approach. Trading plan and contents. So why do I have these bakers over here? Well, it's because we teach you how to cook and all kinds of food. Could be sushi, barbecue, this time frame. And it's up to you to pick the method and the approach and the stocks and ETFs you want to trade and the timeframes that you want to trade. That's what your personal trading plan does. You don't have to take every one of our setups. We give high probabilities of stock and option ideas all the time, but you should only trade the ones that are in your universe. And when we say plan, we're literally talking about a written trading plan. And so when you know, we used to have brick and mortar offices, and we had 1 and 2 week labs. And so, I would get in your face when you say, oh, I'm gonna, buy XYZ right now. I'd say, all right, well, show me on what page of your trading plan, supports this, the pattern, et cetera. And inevitably, they unfortunately say, I don't know, it's not in there. Well, then why are you showing it to me? It should be in here. How are you going to manage things? How are you going to, everything should be in this plan. And then you can have a trading checklist before you enter a trade, kind of similar to a pilot. It's just a little checklist here. Okay, is it a good pattern on the time frame I'm trading? What are the markets doing? Multiple relative strength, weakness, and then you enter. But that's just a quick checklist. So this is a major component of your trading plan. What trades are you going to trade? These are just 9 beautiful ones that we use as examples all the time. And then we overlay those other concepts that were on page 2.
So we could trade any of those.
Any of these are beautiful.
Because as it says, call it what you want, it's going up. And that's the technical part of understanding these pictures, which, takes a little extra time, like any other education. But understanding these pictures in the context of the other concepts from that other slide builds the technical part of the trading plan. So the technical part of the trading plan isn't necessarily equal to the psychology of the trading plan. So you may see someone trading a particular pattern or time frame, and you see that things worked out, and you say, oh, I want to do that. And you try and do it, and it's like a disaster. So psychologically, you have to find out what works for you. But all of these pictures are tradable. But that's not really our conversation today.
So just continuing with my hunting analogy, what patterns do you want to trade? Put them in your trading plan. Buy and sell setups. I don't care which ones. They have to fit your personality, your time frame. And the reason I have these 5 animals here is the hunting analogy. I am giving you a license to go out wherever you go to hunt and bring me back these pictures. We like keeping it simple. I say, hey, I'm talking to 8-year-old Johnny. Don't bring me I'm giving you a permit to hunt these 5. Don't bring me back a lizard or a butterfly or a dog. They aren't on your list.
In another way of what Dan is saying, you can go on to the chart, Dan, is that that trading plan creates limitations. You may not like the limitation on any given day, but your patience and discipline part says, hey, don't deviate from those limitations that you have created a belief system that they put the odds in your favor. And we all have different limitations. If anybody saw, Elon Musk interview yesterday on CNBC, or any of the interviews, and you think about the accomplishments of this man, and it's like, and you think to yourself, man, wouldn't I like to be in some sense like him and accomplish all of these fantastic things. I don't have that ability to do all of that. But there are things that I do well, and that's what I need to focus on. So when we talk about different patterns, time frames, and strategies, we have to say that, this isn't something that fits my personality or my abilities. So I don't attempt to do that. If I tried to build a rocket ship, people would die, and I'd go broke. So trading is the same way in that, we have to define what it is that we're going to do and accept that this other stuff, which is vast, I don't do that. It's hard, but that's the goal.
So, I have 1, 2, 3s, so it's right, and all these obviously on the opposite side. So this is a bullish 1, 2, 3 continuation from consolidation, one of my favorite. We don't have time today to get into it, but this is a very high quality bear 1, 2, 3 continuation breakdown from, breakout failure, inability to bounce. And this is just a screenshot of TC2000, which is, Greg mentioned, our scanning tool. And so I was scanning 1, 2, 3s because I love the patterns. It's right here, JHG. We apply our other concepts, and this is a tier 1 beautiful short setup. It's a wide range bar from consolidation, inside bar, the lower third, price void, which means look to the left. There's nothing to stop a big move. And so we give this to our subscribers the next day to short under the low of these 2 bars. Now it's up to the subscriber to say, well, I'm just going to follow you blindly because I like your trades, or yep, that is 100% quality into my trading plan too. And they take the trade, they can manage it with us. They might have their own trading rules. So yeah, we covered that already. We get thousands of beautiful testimonials over the years. This guy, and it's actually part of the learning process. So Greg, I don't know statistics, but we get an overwhelming amount of new people that have been beat up, looking for the Holy Grail, spent money with other snake oil salesmen, and they're like, wow, you all are teaching me this objective approach. So glad, I found you, et cetera.
You read that email string over the weekend.
Yeah.
Someone that was looking for ways, and they had been through the indicator-based methodology. They learned a lot, but was still looking for the Holy Grail, asking me about clouds and dark pools and all kinds of stuff that's out there that whoever uses, but that's not for us.
And
I'm trying to trade against an algorithm. I don't care about dark pools. I don't care about who's on the offer for the last 3 seconds or now taking on the bid. So again, there's a vast amount of information or ways to interpret the market. And if you don't narrow it down to something that's manageable, you're not going to make it.
Yeah. I actually took screenshots of that for the oscillator MT Live. All right, so we're talking about psychology today, right? And how to focus on what really matters, how to have rules. This is a fantastic chart that's in Greg's course on how to objectively manage a winning open long position, a buy setup, if you will. So this is one of our buy setups. And go back to the slide 1 on emotions, which is what, Greg? Oh, look, I have an open game. Should I sell it? Well, I can't blindly tell you yes or no. Let's apply some rules and objectively answer that question. So, why don't you do it? These are your beautiful rules, and I love them.
Yeah, so this is your basic management. Um, so related to a trade that I did this morning, and it hadn't broken yet. It was in Amazon, and one of the reasons that I sold it before it actually broke down was the NASDAQ had run all the way up to resistance. And while the chart looked great, the daily chart and the intraday chart, the setup, it was showing relative weakness. So while it had started moving up, the broader markets outperformed so tremendously that it's like, hey, this just isn't making it. But if I saw it moving up like this and it pulled back and the markets pulled back, and there'd be no reason, right, to get out. So as this came down to a low, come down to minor support, and it starts moving up and it takes out resistance, and we start trailing bar by bar like that, and it reaches what I call the destination, your target, which is some area of resistance, the probability of retracing after things begin to accelerate becomes greater. So while we look at patterns, those patterns develop from some area of support where we look at a couple of moving averages. Is it coming out of a base? Dan mentioned before, is there a void where it can move higher without any great resistance to the left? And then the psychology of the pattern is that once it begins to accelerate, more and more traders are participating on the long side, profits are growing, and as it reaches a resistance area, the probability of more sellers coming in, so I sell. So the trading plan is building what we call a thought process.
Yep.
This is an objective way of managing a trade. It's like, hey, sometimes prices pull back. They don't go straight up, especially at the beginning, because here, let's assume that this was coming down and it starts turning up. You got the psychology of it. Remember the first slide that, euphoria, fear, depression, and so on. And this could be the depression part that now starts to shift. And so traders sell, hey, I can get my money back. I can get half my money back. Let me get out of this thing. And then others that didn't experience that fear, you can go back and look at that slide, and participated here. And you're saying, hey, I got a decent profit. Maybe I'll sell half. It pulls back. Others said, hey, there was a strong move. Let me get on this thing. It's strong. And then as confidence grows, it eventually becomes to, hey, I'm a genius. And the cycle repeats.
Yep, it's a beautiful example. And there's nothing wrong with taking this actual slide or parts of Greg's course and putting them right in your trading journal. That's fine, but make it your own. But this is an excellent slide of getting over the emotions of, oh, look, I have a, open gain. Should I sell? Well, you could sell here for whatever gain, but you're leaving a lot of money on the table for no reason. So here's an example of applying that rule real quick. So I have a 15-minute and hourly on whatever this is. It doesn't matter. And so here, this 15-minute chart, well, let's start over here. So this is for day trading, of course. The vertical lines are a different day. So this gapped up, came in, and then gapped down. I don't know what the daily looks like. So here's my morning sell-off. Here's my sell setup. So let's say we enter right there, and we just apply these rules right here, objectively. If you were good at TradeStation, you could even program TradeStation to do this for you. And so this chart is not showing the pivots, which is, this is a pivot high. So we have 3 lower highs on the left and right. And unless it's near its destination, we're just going to trail pivots until it gets close to its destination or accelerates. But look at this, I don't have enough data to see where my destination is on here. But look, this hourly chart can't even trade above a prior bar's high. This thing's weak as can be. So objectively, just trail it.
And I marked off where pivots would be on that chart.
Yep.
And look, when you see that bar and you're saying, hey, the pivot's all the way up there. Well, part of what the other slide says that begins to accelerate, you could take half above a prior bar's high.
Exactly.
And then use the pivot as that resistance. And as you gain a profit in something and you think, oh, well, if I give it back, well, if there's a possibility of, this, you're never going to get this unless you're willing to let it do what potentially it could do and follow the rules.
Right. Retrace against you and exactly. Come check us out in the green room. That's where you see us starting at 9 a.m. We're applying our method in real time. So instead of talking about these beautiful charts and, oh, look what I did, we're scanning, we're answering questions, we're doing it in real time. Start at 9 a.m. Even on YouTube, you can watch our pre-market analysis every day. This is just a checklist I mentioned that you could use before you enter a trade. And this is just a condensed version of your trading plan, if you will. You develop a routine. And that's why I love this business. I got 6 screens here at home, but I can take my 15.5-inch Dell laptop, travel anywhere in the world with an internet, and I have a routine. Fire it up, get a bias on the markets. I can scan what time frame am I trading. This mentions your for swing trading. What are you going to do? Whether a swing trader or day trader. This is just more pictures of different scans from TC 2000 that we find we're never short of trading ideas for day trading or swing trading. And this is fabulous. We use it at night on the weekend for swing trading. We use it, Greg, I've seen on his iPhone in an elevator. He literally pulls this up and he can find trade ideas just going down the elevator that quick.
Thank you for that. But look, everything is about knowing what you're looking for. And so what the scan does is go out there and look at thousands of stocks that meet a certain criteria and show them to me. So it's automating the manual, right? The manual work. And so green WRB, it's a wide range bar. That's an explosive bar. Now you need to go look at the chart and say, hey, is it breaking out, out of a trading range, or is it a wide range bar potentially ending a move, a bullish 180, it went down and it came up again. A bottoming tail bar is just compressing the data. So different pictures. The scanning software is just a tool, and it won't by itself make you money. It's just once you understand what it's looking for, it just puts those ideas in front of you, and that's of course what you want.
Yeah, and then we individually go through them for quality. All right, we talked about what makes traders succeed, what makes them fail. Well, it's kind of doing everything that we talk, doing the opposite or not following what we talked about. No planning, you treat it like a lottery ticket. You don't treat it like a business. There you go, Greg, right? He has the course, advanced management strategies. And when we had these labs that I was telling you about, brick and mortar, to illustrate this point, I actually had an exercise. I just got them into 5 arbitrary stocks without even looking at them. You're long Microsoft, you're short NVIDIA, you're this. I said, now apply your money management rules to this inventory I just put in your computer.
What I'm drawing here, Dan, you know I like to draw.
And you're good at it.
Yeah. This MT Live is about trader psychology. It's about emotions. Saying it's another way of saying psychology, your emotions. How do you control emotions? Well, in reality, you can't. You're not a computer. You can recognize emotions that maybe are deviating from, let's call whatever normal is for you or me or whatever. But we can escalate those emotions by not using proper money management. Meaning, if I put on a position that is too big for my trading account, where now I am in fear of my life, financial life, of course, the emotions are going to skyrocket. In addition, you also think, well, if I put on this big position, if it works out, I'm going to make a lot of money. Okay. But if it doesn't work out, you're going to be crushed on that trade. So without this money management, without these rules and the discipline to follow those rules, you will never be in control of the emotions. And we talked about recognizing your limitations, and then, the proper money management, the patience and discipline to apply those money management rules will free you emotionally from the craziness that we experience without it. It's a huge part of what you need to learn. And Dan mentioned the money management course, but the swing trading course has a lot of information in there about position and money management as well.
Yeah, so we're almost done here. Then we'll look at charts as always. So, okay, so Greg, you blew up, and there's different situations. It could be because you have no experience and now you're ready to take a course, and that's the easy answer. Take the course. That's the first step. It could be, you know what, I thought I knew what I'm doing, and the market's just, as you say, Mr. Schizophrenic, and I'm nervous right now. What do I do? So getting back on the horse after a losing streak, we say, well, stop trading. Review the prior trades in detail. Review the winners and losers, recognize patterns. You'll see something. If you don't look at the trades, then that's the first step. We're trying, it's like a mechanic, trying to see what went wrong. Get rid of the poor quality trades, see what your trading demons are, develop consistency. So go trade, commissions are free now. Go trade 1 share, 5 shares, doesn't matter. Go through that checklist, high probability setup. Everything's checked, put on very light share size, because that's better than paper trading. Be selective, review the material in the class. Come see us in the green room. We'll review every trade with you before. We'll review past trades, but also future trades.
This slide assumes that you're keeping a trading journal. So in the swing course or the MTS course, I show you how to do that with software that's on your computer right now.
Yeah, so tell them about your, here's your course, here's a little emotion in here, what it takes to succeed.
Well, we covered that. You need a method, whatever that's based on. Ours is technical, multiple time frames, relative strength, weakness, and so on. You need to assimilate that information. Secrets. Oh, secrets. That's a great marketing thing. Elliott Wave, Fibonacci, Gann, Ichikumi clouds, some kind of indicator methodology to predict the future. And so at some point you got to decide what it is that you're going to use. It says defining opportunities. The odds are in my favor. So I take the trade. Again, money management. In the course, I teach you how to add to positions, even averaging down at the appropriate time, and I explain why you would do that. And accepting, this is a big thing. Yeah, accepting you don't know what's going to happen next. We want to believe what's going to happen because it's about feeling secure. That's the psychological part. You know, whether you're driving a car, some other profession, if you're an accountant, you know 2 + 2 = 4. And it's always 2 + 2 = 4. Driving the car, step on the brake, the car stops. You ever have a car where the brakes failed? And your heart is like, you're going to die? Well, get into a bad trade without proper money management, and you're going to have that feeling. And money management is the key. It's a major key. Of course, again, it has to be applied to a method that you have confidence in. Right? Okay. And this is the swing trading course. You can go to the website and see there's a drop down thing, everything that it covers. All right. mastertrader.com/swing trading. Some as far as directional trading, the swing trading course. This, besides the swing trading course, this includes, even if you know nothing about Master Trader and what we're doing, this course gets you up to speed immediately with how we approach things, either through options, through directional, the technical analysis, how the markets are created, the top-down approach, how we view things as to, hey, here's the broader markets, these are sectors, these are stocks within the sectors, this is how we come to a conclusion as to what's strong, what's weak, and this is the technicals that we're going to use, or the options that we're going to use. The swing, you get the advisory letter, the scans, the coaching, here the swing trading course. You want to use options, they're liquid, fantastic. They'll teach you how to do that. Or if you're interested in both, there's a fantastic opportunity to take advantage of all of it, if so interested. But if you're here, you have some interest in it. All right.
Yeah, let's pull up the charts here for 10 minutes or so. Well, Sam, I know you're joking a little bit, but that's actually today's subject also, if you think about it, which is we're relying on objective information, and I don't care if bad news is good news. Yes, there could be the time with the Fed reaction that I understand exactly what you're talking about, but we trade news of we could trade with the news or against the news because we're relying on price action. And something that doesn't go up on good news is relative weakness, like Greg said with his Amazon earlier. But Greg, your Netflix rocked all day.
Yeah, I was pulling back. So here's the Dow. Sam had mentioned it. And you look at that in this time frame and say, oh, okay, it's near support. It's reversing here, but it's trending down. What's the big deal? Well, from this point of view of a 5-minute, this is a 2-minute chart, it is a big deal. So then it was basing after being up, and it broke out. And this, I don't know why, Dan, this tends to happen while we're doing empty lies. Things make these kind of moves. But this isn't the first time, something like this moved as it did. So we need to put this in perspective, and understanding how to utilize multiple timeframes is part of the course. And you have to pick what timeframes that you're going to use and how to interpret them. So looking at something that is moved like this on a 2-minute chart, we could say it's extended. The meaning of extended means it's probably near the end of the move. Now, how do I interpret that? Well, I look at price patterns. I look at what's to the left. And if I compress this, right, what I see is, right, it's up at the top of the trading range. That's the S&P 500, the spiders. So while it made a significant move today, from this point of view, it's just back and forth, back and forth. What it's been doing now, you can see the dates here. It just seems like an eternity that it's been doing nothing. If I look at the Russell 2000, right, IWM, it's at the top of the trading range. So when you look at this and you know, looking at multiple time frames, as something comes down to support, oh, I think there have been buyers there before. Well, I think there'll be buyers there again. Now look for a picture in the time frame that you're using that supports that. And so without switching time frames, this is what we call a 180 reversal. That suggests it's going to go up. And there's a void. Now that it's reached to the top of the trading range, it would be foolish for me to be buying this at this point, especially during the day after it's run to the top of the trading range. Common sense, right? What we do is focus on common sense. You know, the Dow at the top of the trading range. Now, the Qs, the NASDAQ 100, which has been leading the way, is not at the top of the trading range. It's breaking out. So if I go to a higher time frame like the daily, where's the next reference point? We always saying look to the left. And it's getting pretty darn close to what we referred to as its destination. So the psychology is built on a thought process, and why the modules in the course are called thought building lessons. As we put together the lessons, it tells us what to think in the time frames that we're trading. So trading ranges, reaching its destination, another trading range. And so as we put that together, we create strategies as to what to do. Now, it's almost 1 o'clock. And these charts, right, these charts, I'll just pick 13, I'll lose that, may not look like this at 4 o'clock. But what I do know is that the probability of this move in the short term is near over. Momentum is going to stall. That's my belief. That's what I believe based on the chart. Now we're going to see what's going to happen. Now, look at something else, something I was looking at earlier today and thinking, oh, this will be one that when it forms a buy setup intraday, I'll buy it. And I put it in one of my thumbnails. Look at what happened. It looked great, right? And I was like, okay, this will pull back at some point. And look at what it did for whatever reason. And the markets are going up. It fell apart. And what this reinforces, one of the things that we said is we don't know the future, but you need to have a plan how to deal with something like this. I was never in it, but now, of course, I have no interest in being in it. So it's a great example of how what's happening in the moment can change dramatically, and you need a plan. And if I was in it, my position in money management would have told me when to get out. So, and you need to have all of it. A method, money includes money management, position management, it equals the proper trading psychology. I hope you enjoyed this and helped. And Dan and I will be back next week. We'll talk then.
Good trading, everyone.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.